Good evening, I'm Nima Rajan, and this is Forum Daily News for Thursday, March 3rd. Tonight, we start the cast in the nation's capital as the government warns of severe consequences for those who join to fight with Russia. Deputy Prime Minister Chrystia Freeland issued the warning during a news conference in Ottawa today, where she announced further sanctions against Russia over its invasion of Ukraine. The Deputy Prime Minister said Canada believes Russia's attack is illegal, implying anyone fighting for the Russian side could be breaking international law. Defense Minister Anita Anand, however, acknowledged there are uncertainties around whether it is legal for Canadians to fight for the Ukrainian side. Many Canadians have been answering the Ukrainian government's call for volunteers to join an international brigade to help defend the country. Ms. Anand instead encouraged people to enlist with the Canadian Armed Forces, which is in the midst of a recruitment drive as it deals with a shortfall of thousands of service members. Well, this comes as 1 million Ukrainians have left their homes as Russian forces advance. But Canada is making rule changes to give some a safe haven. Ukrainian refugees will be able to get expedited temporary visas for emergency travel. The government will provide fast-tracked visas for any Ukrainians who wish to come to Canada to work and then return home when it is safe, with the application process opening in about 14 days. Meanwhile, almost two-thirds of Canadians responding to a new survey believe the Russian invasion of Ukraine could turn into a world war. And a little more than half of those surveyed, as part of a new Leger poll, would be in favor of Canada providing military support through NATO. Almost 75% think President Vladimir Putin lied to try to justify the invasion. Russia's attack on Ukraine is also impacting the oil and gas industry, which says the war in Ukraine is proof that Canada must increase its own fossil fuel production to ensure long-term energy security. But environmentalists say the conflict highlights the need to invest in renewables and wean off fossil fuels entirely. The Canadian Association of Petroleum Producers says Canadians need a clear commitment from the federal government to grow Canadian oil and gas development and exports in light of the war. But Keith Stewart of Greenpeace Canada says the Ukraine war shows that global dependence on oil makes the world a more dangerous place. He says the best way to ensure long-term energy security is to ramp up investment in renewables. Tensions are also rising within Canada, as experts who monitor extremism and the far right say the anger and widespread distrust of media, governments, and health authorities that fueled the recent convoy protest in Ottawa are here to stay. Not only that, they're warning the issues will have a long-term impact on Canadian politics. A Queen's University assistant professor believes the convoy protest resulted in a maturing and mainstreaming of a right-wing Canadian populist movement similar to the Tea Party in the U.S. Turning to the Federal Conservative Party now, which plans to wait until September 10th to choose a new leader. An organizing committee adopted the rules and set a voting date last night, adding potential candidates have until April 19th to come forward. So far, only Ottawa area MP Pierre Poilievre has said he will run for the leadership. Former Quebec Premier Jean Charest earlier met with about 40 MPs and senators, but said he wanted to see the rules before making a decision to enter the race. All right, I want to switch gears here to a recent joint venture between two top Canadian cannabis companies, Tilray Brands and HEXO. Their strategic partnership will provide shared services to both firms. The companies estimate they will see total savings of up to $50 million, shared equally within 2 years. A Toronto healthcare facility wants to help heal the workers who work to heal us. Runnymede Healthcare Centre unveiled plans today to build a rehabilitation center dedicated solely to treating first responders and medical personnel for post-traumatic stress injuries. Runnymede CEO Connie Dayak says there will be an outpatient center in Toronto and a 40-bed inpatient facility in Caledon. Ms. Dayak adds that construction is set to begin this spring with the goal of completion in late 2024. Meanwhile, the Toronto Zoo is saying goodbye to a pair of female Arctic wolves. They will soon have a new home at the Magnetic Hill Zoo in Moncton, New Brunswick. Valentina and Viola are getting acclimated and will soon join the zoo's lone male Arctic wolf. Arctic wolves usually live in packs of 8 to 10 animals, and zookeepers think the newcomers will be a good fit with 10-year-old Siku. We'll be right back after the break, where we take a look at the relationship between stock markets and wars as Russia's invasion of Ukraine continues. An interview with Brendan Caldwell, director of Caldwell Securities, is up next, so stay with us. We'll be right back shortly on Forum Daily News. The ongoing invasion of Ukraine is not only impacting international economies, but international markets as well. This war has introduced uncertainty to a market that has already been shaken up by the pandemic. Even though the initial drop in the markets during the onslaught of the Russian invasion has already bounced back from the start of the attack, investors might be concerned about their portfolios during this uncertain time. Joining us now to give us an idea of how the markets will continue to be impacted is Brendan Caldwell, director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, Nima.
Now, Brendan, our thoughts are with the people of Ukraine. We're seeing a lot of loss there, but today we are here to talk about the markets. So let's start with how the stock markets respond during acts of war.
It really varies. The stock market is in this respect as mercenary as people think it is. If the act of war, it is perceived as going to have a big impact on business, the decline is deeper and the recovery period is longer. But if the market perceives no great threat to commerce, then, it's business as usual, sometimes with little or no correction. It's almost cynical in that respect, certainly utilitarian and perhaps even mercenary.
Now, taking a look at previous acts of war, historically, what has the recovery period been?
It really varies. So the longest in modern times is when the Japanese bombed Pearl Harbor. It was, I think, 242 days, something like that, for the market to bounce back. But then that's when America well and truly knew that it was at war. But other things, including, and again, I would say cynically perhaps, but including the Russian invasion of Ukraine, there was little or no reaction and the market bounced back almost instantaneously. I think the benchmark for my lifetime is the September 11th attacks on the World Trade Center, where I think it took 42 days for the market to get back. And by the end of that year, the end of 2001, the market was higher than it was the day before 9/11. So it's really the market's assessment on how much is this really going to affect the world's economics, America's economics. So it matters more what's going on in business than the short-term political act of aggression, terrorist or war action. It's business first and foremost with the markets.
Mm-hmm. Well, taking that into consideration, how worried should investors be with some of their investments?
Well, the funny thing is that it's always the exogenous shock, the black swan, the thing you don't expect to happen that gets you on a clear Tuesday. So that the COVID pandemic was not really expected, not like this. We've had pandemics before and nothing really came of it. We had SARS and MARS and different ones, swine flu, and that really didn't affect things. So that this came was the first time in 100 years that we'd had a real full-on global pandemic that had an impact on economics. So the initial correction was a surprise, and it rarely, if ever, does the market have a massive correction while it's still hitting new highs, which is what it was doing in 2020. Flash forward to the present, all that's known about the Russian invasion in its economic impact is already taken into account. I think it can go one of two ways. Either this escalates and gets worse, God forbid it gets a lot worse, but that would be a new information, or all of a sudden we wake up and there's a peace agreement, or there's been a coup in Russia, or something's happened to de-escalate the events in Ukraine, and then you can see the market go way up. So really nobody has a firm idea of what is for sure going to happen in this situation. We, as you say, do pray, and our thoughts and prayers are with the people of Ukraine right now.
All right, Brendan, just a quick 45 seconds left here, but what would be your last message for investors who might be concerned about their portfolios right now?
Well, I think you need to really have a good look at what you need in terms of cash. Don't have a run on the bank. Don't sell everything, because for all we know, this could do well from here. But if you think you're going to need cash in the next 3 months, 6 months, 12 months for a particular purpose, you may take this opportunity. The markets are very strong, at least in the last couple of days, to take some money off the table that you know you're going to need. But I wouldn't sell everything and run for the hills. Conversely, if you think this is a good time to invest a little bit. A conversation you and I have had a couple of times. Start with a little bit now, and if it goes well, you add more. If it doesn't go well, add more anyway. So that's my best thought.
Always an informative conversation. Brendan, thank you again for your time today.
Thank you.
Stay with us. More news from around the world coming up next. Our market update up next. Welcome back. Up next, Forum Daily's Market Update with Catherine Murray. Catherine is the host of The Buck Stops Here, and she joins us now. All yours, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market update. I am Catherine Murray. Well, markets this week have seen some major swings, a lot of volatility in the marketplace. The moves have been to the upside as well as to the downside. Currently, we are seeing U.S. markets trade lower to the tune of about 0.5 to 1.2%, unable to continue that move higher, which we saw yesterday, a huge gain in the Dow Jones Industrial Average. Now, of course, the moves this week have been driven by the uncertainty surrounding Russia and Ukraine, and of course, concerns about the U.S. Fed tightening cycle. On the positive side, that we did actually learn from U.S. Fed Chair Jerome Powell to expect a 25 basis points hike in March. That actually may have eased some investor concerns who had originally been pricing in a 50 basis point increase. The bullish thesis, though, does surround oversold conditions, so a little bit of a technical aspect there, and that's perhaps one reason why we saw the market move higher yesterday, in addition to perhaps the Fed moving to the tune of 25 basis points, not 50. We don't know that yet, but that's the take right now. And there is a bit of a buy the dip mentality. And Tina, there is no alternative. Also, of course, on the positive side, we do have improving COVID trends, and U.S. consumers have $2.5 trillion in pent-up savings. So that is a lot of potential pent-up demand that could help boost the overall economy. Now, of course, the main concern when we think about the market and the market moves is what's going on with the inflation front, specifically oil. We saw a huge spike in the price of oil, WTI hitting $116. That's the highest we've seen oil since September of 2008. We've actually got some analysts out there saying that we could see $170 to $180. Now, of course, the biggest concern is that would hit the consumer and therefore impact demand here at home, but also, of course, around the globe. Also, we have concerns surrounding the supply chain disruption on the fertilizer front, stemming out of Ukraine and Russia, and that could increase the cost to farmers and therefore food inflation once again. So inflation is still the biggest focus area. Second probably would be the U.S. Federal Reserve. Today, we are seeing oil pull back a little bit. That's after Iran, after reports that we could see an Iran nuclear deal, which could be signed, allowing for Iran to be able to export about 2 million barrels per day in about 2 months' time. So alleviating some of the pressure there. In terms of the market moves today, in the United States, consumer staples, utilities, REITs, healthcare are outperforming the broader markets. In terms of the TSX, of course, in Canada, the biggest news here really was what we heard from the Bank of Canada yesterday. They did raise rates by 25 basis points and reiterated that they are on track to continue to increase rates. Quantitative tightening, not easing anymore, tightening was discussed, but we don't know the timing in terms of when they'll start to pull back those bond purchases. And it was indicated, of course, that it will be based on the economy. I think we'll probably hear from a number of various central bankers around the world that the timing of quantitative tightening will depend on what is going on in Russia and Ukraine. Away from that, on the TSX front, we did see TD wrapping up a strong quarter for the Canadian banks. So some strong results there, but the stock is trading lower. We are seeing a little bit of pressure on the financials today. And away from that, the TSX is trading mildly higher, but that does follow some nice strength yesterday, up by 1.2%. In terms of some other stocks that we're watching pretty closely, CNQ in the energy patch. They did come in with better than expected earnings, setting that stock up by about 4%. Tricon, which invests in U.S. real estate, but it's a Canadian company and Canadian listed, better than expected results, setting that stock up by over 2%. And Constellation Software, also some good results there. That stock moving higher to the tune of 1.2%. Importantly as well, we always keep our eyes on the Canadian housing market. It affects so many of us. We did see that prices continue to move higher in the two big markets that, of course, Vancouver and Toronto, moving up 20% year over year in Vancouver and 28% in Canada. In terms of the sanctions, just to kind of wrap it here, obviously expect trade disruption, higher prices, inflation on the food front, as well as your gas prices. Interestingly, though, the pressure continues. MSCI did remove Russian stocks from the emerging market index, saying that they are uninvestable. And we also heard from Fitch and Moody's slashing Russia's debt rating 6 notches to junk status. We will see how this all plays out. But for now, we are definitely seeing supply disruptions and higher prices. Nima, I'll leave it there. Back to you.
Well, that's quite the cut to Russia's credit rating, Catherine. Thanks for that. For more analysis and news on the markets, be sure to tune in to Catherine Murray on The Buck Stops Here. All right, coming up after the break, we'll have more on Russia's invasion of Ukraine, a changing relationship between Europe and Russian energy, and of course the Paralympics. These stories and more news from around the world when we return on Forum Daily News. Ukraine says it has agreed with Russia to create safe corridors within the country to evacuate civilians and deliver aid. Russian President Vladimir Putin previously said the Russian military had offered safe corridors to civilians who want out of Ukraine, but he claimed that Ukrainian nationalist groups were preventing them from leaving. Mr. Putin also claimed the groups were using civilians as shields and that the Russian military is fighting, quote, neo-Nazis. The Russian military says it hasn't targeted residential areas, but the Associated Press has documented mass casualties and severe damage to residential areas of Kyiv, Kharkiv, and Chernihiv, and other cities. Meanwhile, Europe is scrambling to reduce its natural gas dependence on Russia, and it won't be easy. Governments are rolling out plans for new gas imports and pipelines, but that's going to take time. For now, they're rounding up more liquid gas that can come by ship instead of by pipeline from Russia. But the pressure is on because gas prices have hit a record for a second day in a row on Thursday. Gas is still flowing for now, but that price spike is being driven by fears that eventually Western sanctions will either hit Russia's gas and oil business or that Russia may retaliate by restricting supply. One of the big three credit rating agencies is also taking actions against Russia. Fitch Ratings has downgraded Russia's credit rating, citing a severe shock to fundamental conditions due to its invasion of Ukraine. Fitch said the war has raised risks to financial stability and Western sanctions are limiting access to foreign currency, and it could undermine Russia's ability to service its government debt. Russia's debt isn't the only thing the country needs to worry about. The Russian Paralympic Committee is calling the International Paralympic Committee's decision to expel its athletes baseless and illegal. Kremlin spokesman Dmitry Peskov is calling it a disgrace. The IPC had initially said Russians and Belarusians could compete as neutral athletes at the upcoming Paralympics in Beijing. It's now reversing course, describing the athletes' village as a very volatile place because of the invasion of Ukraine. The IPC joins sports like soccer, track, basketball, hockey, and others that have imposed blanket bans on Russians and Belarusians. Well, meanwhile, China is responding to accusations of its own involvement in the Ukraine war. A Chinese foreign ministry spokesperson is denying a report that it asked Russia to delay invading Ukraine until after the Beijing Winter Olympics. Wang Wenbin calls the report fake news and a very despicable attempt to divert attention and shift blame over the conflict. Mr. Wang also repeated China's accusation that Washington provoked the war by not ruling out NATO membership for Ukraine. Turning to North Africa now, where hundreds of people have tried for a second day to climb over the fences that separate a Spanish city from Morocco. The Spanish government's delegation in Melilla said Thursday that 1,200 migrants attempted to scale the 20-foot barrier that circles the city, and 380 succeeded. Spanish security forces activated an anti-intrusion mechanism to confront what the government's delegation described as extreme violence by trespassers who threw stones and used hooks and sticks at border agents. Flood warnings in Australia. Around 500,000 people in Sydney and its surrounding areas have been told to evacuate or prepare to flee floodwaters. Torrential rain is lashing an extraordinarily long stretch of the Australian east coast. Rivers are rising in the populous cities of Sydney and Brisbane. Australia's Bureau of Meteorology is warning of life-threatening flash flooding and damaging winds. Moving to the world's attempt to clean up the planet. United Nations countries have agreed to create a legally binding global treaty to address plastic pollution in the world's oceans, rivers, and landscapes. The move by the UN Environment Assembly sets the stage for international negotiations designed to produce a treaty by 2024. Negotiators fashioned a framework for a global approach to prevent and reduce plastic pollution, including marine litter. We end our cast with a positive development for the endangered killer whale. Researchers say a new calf born in a pod of endangered southern resident killer whales off the west coast appears to be in good health. They estimate the calf, dubbed J59, was born sometime in the past few weeks, based on its lumpy appearance. It's the first baby born to the pod since September 2020. 3 separate pods make up the endangered southern resident population of just over 70 whales. All right, I'm Nima Rajan, and that'll do it for your look at national and international news for today. Take care in Canada. We'll see you next time on Forum Daily News.